Welcome to Agricultural Development Trust, Sharda Bai Pawar Mahila Arts Commerce Science College, Sharda Nagar, Baramati. I am Professor Poonam Mishra, brought for you the subject Secretarial Practice, under which we are learning the chapter number 2, Joint Stock Company. So students, before knowing more about the joint stock company, first we should understand how many types of business organization exist in India, how many types are there in the businessman can conduct his activity. So according to the Companies Act or the government regulation, the 5 types of business are legally registered under the India. Out of that, the first one is a sole trading concern, means the single or individual trading concern. Sole means single, concern means business. Here the only one person will be the promoter, director, member, establisher, controller, manager or decision maker of his business. Nobody interferes in his business decisions. He can anytime entry in the market and he can exist the markets as per his convenience and wish. Next type of business is partnership business. Partnership is a business which exists or very famous in India, where 2 or more person comes together on a contractual basis or a permanent basis. They conduct some legal business activity and their profit and loss are shared by them in the ratio decided by them or equally. Next type of business is joint Hindu family business. Now students, let me tell you that joint Hindu family exists only in India. In no any other country you can find the family, joint family. So this kind of business is existing only in India, where the ancestral or the business activity is passed to generation, and any person who takes the birth in the family becomes the member, and his membership gets over after the death of the person. So here the profit and loss will be shared by the equally, and head of the family will be known as a karta. So head of the family or the karta is the decision maker for this kind of business, which is known as a joint Hindu family business. Next type of business is joint stock companies. Now the students, joint stock company is little bit different from these 3 types of business. It is a very wider concept. So that's why we have to study in this chapter the joint stock company in very detail, their features, their types. So company means the legal firm established after the registration. So we will understood about it in detail further. So students, these are the name of few joint stock company: Oracle, Vodafone, Citibank, Xerox, P&G, Hindustan Unilever. The big name companies are known as a joint stock company, which are run by the huge number of employees and directors. So this is a wider concept, so we have to study it separately in detail. Next type of business organization is cooperative society. As the name suggests, that the cooperative society is a group of few members of a society or any fun club or any association which are established for the help of economically weaker section of the society or the member of the society. Here these groups are mainly formed for providing the services on a very concessional rate, and basically the main feature of cooperative society, it is always established for the welfare of the people. Self-help group means here the people becomes the member of the society and they get the benefit of the provided by the cooperative society group. So here are the some features or characteristics is given in the pic. You can see that What are the features of characteristics or features of cooperative society? The first one is a voluntary association. Yes, it is a voluntary association. No one is bound to become the member of cooperative society. Nobody is forced to become the member. It's their wish. If they want to become the member, they can take the membership of cooperative society. Next is separate legal entity, like a joint stock company, like a partnership business, who are legally registered. Cooperative society is also legally registered. So that's why the cooperative society also has a legal entity or legal status in the market. Democratic management, yes, it is a democratic management because its decisions are taken by all the member of society. All the member decide their leader, secretary for their society, and here it is the decision is totally democratic. No individual decision are bound on any other member. Next is service motive. Basically, these societies are formed for providing the service. For example, so many NGOs you can see, non-profit organization, who form their group to promote the weaker section, to promote the woman, to stop the girl child marriage, or any social activity. So these are some example of the cooperative societies only. Next is utilization of surplus. Yes, the person who becomes the member of the societies pay some membership fees, and they have some profit as well at the end. So those profit or those surplus they use for the benefit of the whole member or for the society. Cash trading in cooperative society, they basically does the cash trading only. Fixed rate of return, like a joint stock company, they also give the fixed rate of return to their member. Government also keep the control on the cooperative societies, and like a joint stock company, like partnership firm, cooperative society also collect the capital from their members. Student, now we will see the joint stock company meaning, definition and feature, which is very important because your chapter is joint stock company, so you should know what is joint stock company. So that's why I have not explained you much about joint stock company in last PPT. So here you can see the meaning of joint stock company is: a joint stock company is a more formal, very formal form of business organization. It is capable of satisfying the requirement of modern industry. Modern need of the industry is the formal business. Everything should be done on a formal basis. So joint stock company is that kind of business organization which satisfy the requirement of the modern industry. It is most convenient, means most suitable form of business organization for the conduct of large scale business activity. It is most important for the businessman who conduct the business on a very large scale. Company means a group of individuals. Now what is company? It is a group of individuals who are associated for lawful purpose or goal. They are associated, they are related to the company for their some legal purpose or the goal. Capital is invested by the large number of persons into the joint stock company. In a simple word, joint stock company means the voluntary association of persons carrying some lawful business to earn the profit therefrom. Simple word says that the joint stock company means voluntary, means as per their own wish, associate, come together, and person carries some lawful legal business to earn the profit from that business therefrom. Next we will see two definitions, students. So first one says, according to section 2 subsection 20 of the Companies Act 2013, company means a company incorporated under this act under any previous company law. Means you can say the joint stock company when it is registered under the Companies Act 2013 only, or any other previous company act. Next is, according to Professor H.L. Hannay, a joint stock company is a voluntary association of individuals for profit. It is a wish of the people who come in the company, become the member, join the company, form an association for earning the profit, having its capital divided into transferable shares. So the large number of capital is divided into small shares, and the ownership of which is the condition of the membership. So who wants to become the owner of that company, they should become the member. And how they can become the member? By purchasing the share. If they purchase the share, it means they are contributing to the capital of the company. Next we will see the features of joint stock company, under which the first feature says voluntary association. Now student, what is voluntary association? Voluntary association means the person comes into the business as per their own wish. They are not forced to become the member of the company. Next is incorporated association. Yes, it is a registered association. It is totally registered by legal procedure. So all the registration process are done as per the Companies Act. So it is an incorporated and registered association under the eyes of law or as per the provision of Companies Act. Next is a separate legal entity. Why it is a separate legal firm? Entity means firm. Yes, it is a legal firm. Why? It is registered firm under the government regulation or the Companies Act rule. So it enjoy the legal status in the market. Nobody can say that it's a illegal business. So they can conduct their business freely. Next one is a artificial person. Yes, students, as we are a natural person, we have our own signature, our own name, our permanent account number, PAN, our Aadhaar, and our birth certificate also. So likewise, the joint stock company also have their registration certificate like a birth certificate. They have their own name, and the name company's bank account is also opened by the name of the company only. And the company has its own signature as a common seal. So that's why all the features of natural person are given to the joint stock company. So that's why the joint stock company known as a artificial person, which is created by law. Perpetual succession means the company enjoy the long life, stable life. No any member's death or birth or entrance of any new member affect the life of the company. Company keep conducting the business, keep going till the winding up, and that's why the joint stock company has their perpetual and long lasting life. Next is a common seal. Company has a common seal there as their signature. You know, as a natural person, company cannot sign by their own, but by the name of the company, as a signature of the company, common seal are created, and those common seal are attested on all the legal document of the company. Next is limited liability. Limited liability means the member who purchased the share of the company has to pay the amount which is not paid on his share only. He has not to pay any other liability of the company beyond his share. So here all member have their liability which is limited to their share only. Next is separate ownership and management. Yes, students, for this I will tell you that the joint stock companies are managed by the board of directors, and the owner of the joint stock company are the shareholder or the member. So all the member and shareholder will not manage the company. Management is given to some other person who are decided or chosen or elected by the owners or the shareholder of the company. That's why there is a separation in the ownership of the company and management of the company. Transferability of the shares. Joint stock companies shares are easily transferable in case of public company, but in case of private company the shares cannot be transferred. So any one member who wants to transfer his shares to some another person, he can transfer his share if he is a he is a member of public company. Next is a number of member. Minimum number of member for private company is 2 and maximum numbers are 200. And in case of public company, minimum numbers of member are 7 and maximum there is no limit. Capital. Yes, this is the very important point, students. Capital is collected by the joint stock company by selling the share in the market to the public. But let me tell you, only the public limited company can sell their share and collect the capital from the public. Private company has to arrange the capital from their employees, relatives, or any banking organization or the financial institution on the way of borrowings. So only the capital can be collected by the public joint stock company by issuing the shares to the public. Next is a government control. Yes, every joint stock company runs under the Act of Companies Act 2013. So there is a government control on that. They have to follow all the rules and regulation given as per the government and also as per the Companies Act. Next we will see the types of companies, students, in which first is on the basis of incorporation. Two types of company we can see: statutory company, registered company. On the basis of number of member, as I already told you, private companies member and public companies member. So on the basis of membership, private and public companies there. On the basis of incorporation, statutory and registered companies there. On the basis of liability, company limited by shares, company limited by guarantee, and unlimited liability companies there. On the basis of control, holding company and subsidiary companies there. And other types of company are government company, foreign company, dormant company, listed company, small company. So that we will see in detail further. So student, first on the basis of incorporation, first one is a statutory company. So what is statutory company? These companies are incorporated by the special act, means the special act given to this kind of company like LIC, unit trust, State Bank. You know, State Bank of India is little bit different from all other commercial bank, because SBI has their own exam pattern. They are not coming under the any other commercial bank. So SBI is the main bank of the Bank of India, that is Indian Bank. So all the government transactions are of the Indian companies or the government are done by the SBI only. So some company which require the special act or the special legislation, so those companies are known as a statutory company. That is RBI, the head of or the father of all commercial bank, and the State Bank, unit trust, LIC corporation, all the governmental special act or legislative department is known as a statutory company. Next is registered company. So on the basis of incorporation, one is statutory company for which the special act is required, and another is a incorporated under the Companies Act 2013. This is normally those company, all the companies and bank who are registered under the Companies Act or the Banking Regulation Act. Next, on the basis of number of member, private company. Under the private company means the having minimum paid up capital as may be prescribed by the articles and restrict the right of member to transfer the shares. As I have already told you that the private company cannot transfer their shares. Maximum number of member to the private company is 200, and the prohibit the invitation to the public to subscribe any security or deposit of the company. Already I have told you that the private company cannot collect the capital buy of shares and security and deposit from the public. So if all above conditions are fulfilled, that company will be called as a private company. It must add the words private limited at the name of its, at the end of its name. Next is public company. According to section 2 subsection 71, public company means a company which is not a private company, means all the features of private company is not there, and that company which has not restriction on the transfer of shares, means they can easily transfer their shares to any public. Next is minimum number of members should be 7, as I already told you, and there is no maximum limit for that. And this type of company has a paid-up share capital prescribed by their articles of association, and it also prohibit, means it also not allowed the invitation or acceptance deposit from the public. So this kinds of company also don't have right to invite. Only the government company, where the government has bought more than 51% share, those company can collect the share from the general public. Next is one person company. As the name suggests, student, in one person company only one person will be there, and according to section 2 subsection 62, one person company is a company which has only one person as a member, and it is a private limited company. It has to fulfill and comply all the formalities of the private company unless and otherwise specified in the act or the rule. Means it is just like the private company. One person company is very similar to private company, but the situation is little bit different. In this kind of company only one member will be there. Next is on the basis of liabilities of member. Some member give the limited liability share, means the member is liable to pay the amount to their share amount. It means if a person has bought 100 shares for rupees 1 lakh, so he has to pay only 1 lakh to the company. So his liability is limited to 1 lakh to his share only. So this type of company have a share capital, and the liability of each member is limited to the unpaid part of the face value of the share. It means whatever the amount is pending on the share, that only he has to pay during the existence of the company or in the event of winding off of the company. Next is company limited by guarantee. Here the shareholder or member gives the guarantee to the company, and they have to fulfill that guarantee when the need arises. Section 2 subsection 21, these types of company may or may not have the share capital. Each member promises to pay the fixed sum of money specified in the memorandum in the event of liquidation. Means already the person or the member has given the guarantee in written in the memorandum that if any need arises, I will pay this amount to the company for their need. So the company for the payment of the debt and the liabilities of the company. Generally such companies are not profit making company, because they are formed for the purpose of promotion of art, science, culture, charity, sports and some other similar purpose. So guarantee can be also known as a cooperative society type business, in which no any profit are made, only the welfare or the service are given to the member. Next is unlimited liability company. Unlimited liability company means there is no any limit on the amount for payment to the company. So company can demand any amount when the need arises. Section 2 subsection 92 says a company not having any limit on the liability of its member is termed as an unlimited liability company or unlimited company. The member are fully liable to cover the debt of the company, means they have to pay the amount till their asset are being sold in the market. They have even they have to sell their own personal property, and they should pay the debt of the company. Next is on the basis of control holding company, where the company hold more share, or we can say more than 50% shares of the company. That company is known as a holding company. For example, now the Oriental Bank of Commerce is taken over by the Punjab National Bank. So the Punjab National Bank is a holding company of the Oriental Bank of Commerce, because Oriental Bank of Commerce has sold its share to the Punjab National Bank. So now the nameplate in place of Oriental Bank of Commerce, Punjab National Bank will reveal. Next is subsidiary company. Now subsidiary company is the reverse of holding company. Subsidiary company who are held by some the parent companies. For example, you can see here it's just opposite of holding company. It is a company which is controlled by the holding company. So in the earlier example, Punjab National Bank purchased the shares, more than 51% shares of the Oriental Bank of Commerce. So Punjab National Bank become the holding company and Oriental Bank of Commerce become the subsidiary company. Next is other type of company in which government company is there. So now student, let me tell you the difference between the government and public. In the government company, more than 51% share will be of the government, means the government assurance will be there, and but in case of public company, the control will be of the bank, but share will not be purchased by the government authorities. So that is the difference between the public company or government company. So it is the company which has a capital held by the central government, state government, partly central government or partly state government, or any subsidiary company of the government company or any public company. So this company whose shares are purchased by the government more than 51%, that company will be known as a government company. Next is foreign company. Foreign company means company which is registered outside the India but having the place in India, like Nestle India Limited, Bata India Limited, Whirlpool Corporation, McDonald, Pizza Hut. These are the foreign companies. Dormant company, if a company is registered for future project, has not made any significant accounting transaction in last 2 years, has not filed the financial statement or annual return in the last 2 years, after application can be called as a dormant company. Dormant company, we can say the company which is not active, means the company is registered, company is created, but that is not active company. Those company will be known as a dormant company. Next is a listed company which is registered under the SEBI, Security Exchange Board of India. After the listed into the SEBI, the company can sell the shares on the stock exchange. So students, here we end with the video. Hope you understood the video. Meet you in the next video very soon. Thank you.